Joe Vitale.
Hi everyone, Joe Vitale, American Retirement Advisor with the Gradient Investments weekly talking points for the market week ending October 14th, 2022. Let's get into stocks. The major global indices declined last week based on inflation reports. Surprise, surprise. And with the exception of the Dow Jones Industrial Average, which was up 1.17%. The Dow Jones, remember, is based on just 30 blue chip stocks, which are the largest companies, and the index is weighted toward those with the highest share prices. The S&P 500 declined 1.53, while the Russell 2000 was down 1.15. NASDAQ dropped 3.11%. Now, overseas, the developed markets, which is the EFA, declined 1.35, while the emerging markets dropped 3.81. A few months back, we thought emerging markets were trending really good. Our algorithms show that they're not, which is exactly what we're seeing right now. Now, in the U.S., the best performing sectors were consumer staples and healthcare, while technology and discretionary were the laggards. So let's talk about value also outperformed growth, which is when you see the NASDAQ, which is more growth, and the values is more the S&P and the Dow. So let's talk about fixed income, right? This is what we're seeing a lot. Yields rose while bond prices declined, with the benchmark 10-year Treasury up 11 basis points to 4%. Right now, the 10-year is over 4%. So remember, everybody usually goes safe haven as bonds, right? Run to bonds, run to bonds. Well, then when the interest rates go up, bond prices go down, which is why you're seeing portfolios down 15 to 17% in bonds, which absolutely makes no sense. Normally, that's at safe haven. When the stock prices are going down, you can always run to bonds. You cannot, which is why it's nice to have some fixed annuities or fixed index annuities, so at least we're not losing any money, right? So let's talk about that. Interest rates on a 2-year Treasury continue to exceed those of the 10-year, which is why the yield curve is inverted right now. So this comes at worse than expected reports for both producer wholesale prices and consumer prices. Commodities, let's talk about natural gas, are expected to post their largest yearly percentage gain in 17 years, according to the U.S. government. The Energy Information Administration forecasts that residential natural gas prices this winter will be 22% higher than last winter. Average retail prices for heating oil will be 16% higher, and resident electricity will be up 6%. So buckle down, get ready for it. We're going to see our bills go a little higher. This report also assumes temperatures in October and through March in most of the country will be slightly colder than both last winter and the average previous 10 winters. Go figure. Let's talk about economic data. Producer price reaccelerated in September, and both the headline and core increases were higher than expectations. On a year-over-year basis, inflation fell slightly to 8.5% from 8.7% in the prior month on easier comparisons, while core prices were flat at 5.6%. Now, core consumer prices also rose higher than consensus expectations in September, and on an annualized basis, core prices rose 8.2%, and after excluding volatile food and energy, the core inflation rate of 6.6% was the highest rate in 40 years. I thought it was transitory. Now let's talk about consumer confidence. Rose to its highest level in 6 months, rising 1.2 points to 59.8 in early October. It was a point higher than consensus expectations. Consumer expectations for inflation over the next year rose to 5.1%, erasing the improvement in the past 2 months. Okay, finally, company news. BMW Group, which is a G40I holding, sold almost as many cars in the last quarter as it did in the same quarter of 2021. Now, this was the sequential improvement after the war in the Ukraine and other supply shortages caused a drop in deliveries in the first half of the year. Additionally, battery electric vehicle sales rose 122% in the third quarter, which is 115% higher year to date. Shares rose 4.42% for the week. JP Morgan Chase, which is a holding of the G50 portfolio and the Contrarian and the Core Select strategies, reported quarterly results that beat consensus expectations and raised guidance for the full year. Consumer lending is continuing to show strength, and the bank is benefiting from the higher interest rates. Shares rose 3.09% and 4.92% respectively. And Deutsche Post, which is a G40 holding, issued primary third quarter earnings that were ahead of expectations. Management also said that they will raise full year guidance on November 8th to reflect the strength in their delivery logistics business. Shares were up 7.8% for the week. And that includes our updates for this week. Thank you so much for being part of the ARA family. To contact us, you know the number 855-756-5700. Visit our website, aradvisorsinc.com. Don't forget to subscribe to our Facebook and YouTube pages. Give us a call if there's anything we can do for you. If you say, Joe, my goodness, what should we do here? Let's talk about that. Let's also make sure we're coming to the end of the year. Talk about Roth conversions, making sure we're taking advantage of what we can before the end of the year. So make sure you reach out to us. God bless you. We look forward to seeing you again next week.